We move on to the first panel discussion, the Nigeria opportunity. And boy, it's a wonderful panel. Let me get straight into it. As I call your names, please, you see your name tags there. Just come and take your seats. Protocol dictates that I welcome the Honourable Minister of Solid Minerals Development, Mr. Kayode Fayemi, to the stage, first of all. Please welcome him. Now, my full name is Mark Omorowa Edo, and I'm an Edo man with roots in the red sands of Benin City. So, of course, you won't be surprised that I'm delighted to welcome the next panelist, who is His Excellency, the Governor of Edo State, Mr. Godwin Obaseki. Now, the Debt Management Office, you heard about the DMO in the earlier presentation, is the government's agency responsible for coordinating the Nigerian government strategy for the management of public debts. And earlier this year, they were lucky enough, in July, to have a new Director General appointed by the federal government. Her name is Mrs. Patience Oniha, and she's here in our panel today. Last but not least, to complete this panel, please welcome back the CEO of the Nigerian Stock Exchange, Oscar Onyema. Now, I see my name tag is there, but I'm not as illustrious as my panel, so I'm going to remain standing and ask the questions from here. And it's also better for me to see you over there. So I like simple, direct, and straightforward questions when we have limited time, so I'm going to ask a very, very general question. We just saw that presentation there. There was a lot to digest, a lot of things to digest. I heard groans and applause in equal measure from the audience, and there was a general question that I'll throw back at you, basically. And I'll work my way down. So I'll go to His Excellency the Governor first, and then on with the same question. Simple one. Has Nigeria really turned a corner?
Thank you, Mark. Yes, it has turned a corner. Because if you look back the last 1 year, at the same time last year, or just before now, I was campaigning to be governor of Edo State. And it was a difficult campaign. Because how could I explain to the average woman in the markets why the price of commodities were that high, why there was no growth, why people were suffering? But looking back 1 year after, I can tell you things have changed. Prices are stable in the markets. There's a sense of hope. There is, we still have challenges with the infrastructure, but in some cases, some have improved. And we're beginning to witness a bit more production domestically. We have also seen more stable exchange rates, so prices of commodities in the markets are stable. So when you look back and compare the last 1 year, I'd say we have seen growth, and growth that affects the everyday person in Nigeria.
Now, I'll move from the state level to the federal level. Sometimes to outside watchers, it's hard to be optimistic with such a misty optic when it comes to Nigeria. However, there was great optimism from the governor, and I've heard you speak earlier on today, Honourable Minister. The last presentation was coming out of the eye of the storm. Are we out of that storm?
Thanks, Mark. I believe we are out of the storm. From what Andrew has presented, it's clear that the opportunities are enormous, but being out of the storm should not suggest in any way that stormy waters are totally gone. What is clear from the federal government side is a much more predictable environment, a much more focus on economic security, on transparency in governance, and on a focus on infrastructure with the hope of driving the economy out of the doldrums. And that's beginning to yield dividends, probably on a slow pace, but there's no question that we have turned the corner.
And I'll move on to your left. Mrs. Patience Oniha, very welcome. This is the first time, actually, I'm ever interviewing you, because all the rest of the governor are quite familiar with, and you're very welcome. Are you optimistic?
I certainly would say yes, and from a different perspective. If we look at the issues that led to the recession, the major one, of course, was the external shock arising from oil prices. Then within Nigeria had to do with production levels. If we take it that there hasn't been so much recovery, oil prices haven't gone back to the days of $100 per barrel, and production hasn't really hit the levels of 2.2. So what we've been able to achieve is basically devising solutions from the monetary and fiscal policy sides that have brought us out of recession. And I believe going forward with those policies, as well as the economic recovery and growth plan, we should be able to see steady progress. So we are out, we're on the path of a higher level of growth once those initiatives and policies continue to be implemented.
Now, you mentioned the economic recovery and growth plan. We'll talk about that in a moment, how it impacts the state level as well. But I'll just do a very quick follow-up question. You mentioned oil prices, commodity prices. We seem to somewhat be obsessed with that because of our reliance, our addiction to black gold, I guess you call it. But if you look at the fundamentals of Nigeria, say the balance of payment surplus, for example, it does look sort of optimistic that we can weather these low, over time, these low prices for oil, right? But that's not really a narrative you hear in the media and in the general consciousness. Am I right? Now, let me move on to Oscar. Oscar, in a way, you're the co-host today, and I want to ask you about dual listings. I've got a myriad of questions, but first, from your general perspective, you have quite an eagle eye, because I know that you, as the head of the Nigerian Stock Exchange, you do have an enviable position, because you get to speak with all the key players. You're everywhere. So from that sort of broad macro view of yours, how optimistic are you about going forward into 2018?
I'm very optimistic. If you look at the capital markets, especially the equity markets, we tend to be a forward indicator of economic reality, and the stats that I've shown you indicate that investors are very, very bullish on the Nigerian economy. And if you look at the reports from most of the listed companies, they've been very positive. If you layer upon that the continuing changing geopolitical situation around the globe, it only spells for more positive activity in Nigeria with regards to oil and gas. But they only account for about 9% of GDP. So the question is, the 91% of GDP, what is happening in that space? And if you look at agriculture, there are some phenomenal things going on there. If you look at trade and services, even in the ICT space, we've seen significant inflows of capital from iconic brands such as Facebook and the rest of them. We think we're well positioned actually to leapfrog into the emerging fourth industrial revolution as we engage in partnerships and as we deploy unleash the talent that is available in the country, because the vast majority of our population is in that 25 to 30 age grade, and you know that they're really doing some amazing things around technology. So we're excited. We think that as long as policy continues to be consistent, that both domestic and foreign investors will continue to be very active in the economy.
Now, the economic recovery and growth plan impacts us all, private sector, state level, federal level. And one of the keystones, one of the main points that you've just mentioned there, you mentioned technology, is diversification of the economy. Now, diversification is not a new word. I mean, we've heard it we've been talking about diversification now for 20, 30 years. But there seems to be a real effort now, a real focus, and almost a legacy focus from the previous administration. We're not very good at succession in Nigeria, but in this case, we've managed to move it up the hill in terms of diversifying the economy. We're at a point where we cannot afford not to do it. So you're in the Federal Executive Council, Honourable Minister, representing the solid minerals development area. So what is the conversation at this stage when it comes to diversifying the economy? And in particular, how does your sector support those diversification efforts?
Well, the conversation has an air of inevitability about it. You're right. If you moved from $100 a barrel economy to, at first, a $30 a barrel, 2015, when we came in as a government, to the better part of 2016, when it started climbing again, you really do not have a choice. There's no debate around whether you must look for alternative pathway to generating resources, because it's just not there. And I think that inevitability forced us to rethink. However, we've since latched on to the opportunities that are there, having come to terms with the reality of our situation. And if you take the mining sector, for example, mining sector went into the doldrums for 40 odd years. Once we discovered oil and gas, we forgot the fact that Nigeria used to be the 6th largest steam producer in the world.
The investment went.
And coal producers, gold, we have everything. Nigeria is largely a greenfield as far as that sector is concerned. We also forget the fact that we can't even talk about infrastructure without talking about mining. The limestone has to come from somewhere to make the roads. The bitumen comes from somewhere to make the roads. And so on and so forth. So we have, as a result of that, refocused our energy around exploration, first and foremost. Look, yes, we have minerals. Nigeria is awash with minerals, but what does that really mean in concrete terms? So a lot of our effort is now being spent on aeromagnetic surveys, on exploration, and on encouraging private sector players, because exploration really should be a private sector thing. It shouldn't be a federal government thing. But we have a geological survey agency partnering with the British Geological Survey that's also doing exploration. Over and above that, we are also ensuring that there are enough incentives in the sector to bring in the players, particularly from outside.
You just went on to my next question. I mean, we're in one of the temples, the world's temples of investment here. Yes. But mining requires long-term investment.
Absolutely.
So what sort of incentives are you providing for solid mineral investors if they are out there for you?
Solid mineral investors are always interested in the certainty and predictability of the environment over the long term. Precisely for the point because of the point you made. So for us, the mining code and the regulatory environment should not be one that keeps shifting. So we've kept the law that came into force in 2007. We're not really changing. There are a few things that we're changing, but around the incentives, we've remained constant. 3 to 5 years for pioneer sector players in the mining industry, duty-free mining equipment import into the country, 100% ownership of your company if you choose to do so. There's no compulsion that you must have a local partner, although it may well be in your interest to do so in order to secure your investment, but we're not going to force you to do that. Also, we have one of the best royalty regimes in the mining sector around the world, and our code compares favorably with any other. So these are incentives that we have over the long term, but we are also providing a lot of support for those who want to play in that field.
Now, when we talk about Nigeria, we always think 186 million people, a massive country, and from an investment perspective from the outside, if you don't know Nigeria, you just think Nigeria. But if you're on the inside, the states hold tremendous and distinct opportunities for investments. Edo State has oil, but it also has a lot of other things as well. You've got water, you've got agriculture, you've got maize, you've got a number of things. And I know that if you didn't know this, that His Excellency the Governor was one of the chief architects of the economic plan for his predecessor. And very much was involved in getting that, getting Edo State on track economically. So it's a great, taking over, you're just almost continuing it from the helm, so to speak. But what are you doing in Edo State that mirrors the ambitions of the federal government in regards to diversification?
No, thank you. First, the economic and growth plan presupposes certain fundamentals, that certain fundamentals exist. For us, you've got to first understand that to attract investments, investors have to feel comfortable with the environment you're creating. They've got to have a sense that there is good governance. They have to have a sense that the institutions are properly governed and properly structured and reformed. And it's only when there's that comfort can you begin to expose the opportunities that exist within the states. So for us, what we've done is to, like I said, improve on governance, begin to strengthen the institutions, the civil service, making sure that there's clarity and transparency and accountability in the way government is run, ensuring that you make available a lot of data. And more importantly, you want to ensure that you leverage on technology because that creates that exposure and openness. Having done that, we started to look at specifically at opportunities, to try and understand the federal map and see how we can closely mirror that federal economic map. Like you said, we're blessed with a lot of land resources, with water resources, with mineral resources. And so using technology, making information available, we've been able to create templates to inform investors of our priorities, particularly in the area of agriculture, encouraging plantation agriculture with a lot of outgrower support.
I talked about long-term view. I mean, you are not a politician. You're more like a mechanic in a way. You're getting under the hood and seeing what needs to be fixed. And as the founder of Afrinvest and the former head of Afrinvest, you've got a very long-term vision, haven't you? A 30-year vision. That's what you're putting in place. Tell me about that.
Yeah, you can look at long term without thinking through carefully how to, put in place the structures for the long term have to be put in the short term. Yes, long term, we're going back to where we started from, to history. We're looking at ensuring that we first protect the environment, because long term, if we continue to tamper with the environment the way we're doing, it will not be there. So we're looking long term at preserving the environment, remapping our forest resources.
How do you prioritize?
How do we prioritize? Today, what are the greatest challenges we have? And we prioritize according to those challenges. It's the population bulge. We have, a very youthful population, and we can see our population growth mirroring the national statistics. So we've got to deal with the issue of employment, of creating jobs for young people today and creating hope for them for tomorrow. So that's the number one priority.
And creating jobs they can do now.
Creating jobs they can do now means that you've got to provide them the training, the skills, provide institutions, provide opportunities using what they know how to use best, technologies, smart media, broadband, to give them the access to the markets in the very short term.
Okay, I'm going to move now on to your esteemed panelists. But by the way, the panel is very well behaved today, so please step in if you wish to make a point. Don't wait for me to invite you. You're amongst friends. Mrs. Patience Oniha, Debt Management Office, the new head of the Debt Management Office. You're very welcome. You've been in the news recently, quite a bit. And I've Googled you. I don't know if you felt Googled, but I've Googled you. And you gave a very robust explanation, a deconstruction, demystification of a very significant move that caused a little bit of brouhaha, let's be honest. There was a little bit of tension about this move. We saw it coming. I mean, there was the noise all the way from last year that this was going to happen. But when it happened, it caused a bit of consternation. You are mortgaging our future, said the PDP, and so on. And that was that the federal government announced that it was sourcing funds. The president would go to the Senate and say that we are sourcing funds from external sources of $5.5 billion US, which will be added to Nigeria's public debt. Simple, straightforward. Many people couldn't understand what that meant. It just sounded scary.
Yes.
Yeah. So. Just try to demystify it for us. As I understand it, the debt, the domestic debt, the external debt versus domestic debt mix used to be about 84 to 16 or something like that, right? So it was very heavy on the domestic market, which sucked up capital and liquidity from the local market. But now you're coming to a more balanced 60-40. From my perspective, that looked kind of reasonable. 50-50 sounded reasonable, but you had a bit of a challenge trying to explain this. Here's a chance in front of investors to do it again.
Okay. Thank you very much. I think the presentation by Andrew and his colleague sort of give a background to what we're trying to do. Okay, so the debt has been growing, but more of the domestic debt. So the figures you gave about 84-16 were probably about 2-3 years ago. But since then, we have been working towards increasing the external component. And the reasons are simple. The first one is because we're obviously talking Naira, local currency, and US dollars, the interest rates will always be lower in US dollars. Okay, so that speaks to reducing your debt service costs. If we had a more balanced portfolio in terms of the currency of borrowing, then the debt service costs will be lower. Okay, the second point, the second reason is, again, that presentation clarified it, so I thought at least somebody understood me.
Yes, because his very words were, we need trillions of dollars in external portfolio investment to get GDP numbers up.
Yes, so that's one. But the other reason really also is this whole issue around crowding out the domestic market.
Is that real? That's real. That's really happening.
To the extent that we are dominant, every month we are there. So crowding out, it is a case of let's free some space for domestic borrowers. And in doing that, the expectation is that there'll be more money for the banks to lend to the private sector. But it also means if we are not so much in the market, probably the rates would come down.
Yes.
That doesn't have something to do with monetary policy. It just means once there's a lower supply, really then the price should come down, just working off of that. The third point also is for that strategy really is we want to lengthen the profile, the tenor of the debt. Okay, the understanding that is lacking there is some people still remember the days when we were still indebted to the Paris Club. But in general, the attitude towards debt really, the Nigerian public is not so optimistic when you talk about debt. Okay, and the numbers show that debt to GDP is low, is actually still below 18%, which is extremely low. But the debt service is high, which those numbers show as well. So on the debt service side, there are two aspects. One of it is revenues. How much are we generating as a country? The GDP and the statements we get from the Bureau of Statistics tells us that there's a large informal component there. So if tax to GDP is 6% in Nigeria, something is clearly not working right. It means the government is borrowing to finance the deficit in the budget, borrowing to provide infrastructure, but it's not generating revenue from all of that expenditure. So when it is time to service the debt service figure then looks like it is out of proportion. So it is one part of it is a revenue problem, and that is a major aspect. And so there's a whole lot going on around on the fiscal side on how to generate more revenue. Okay, but that's not to say that we as debt managers are waiting for the revenues to go up so that the debt service to revenue ratios will be lower. Okay, so that's one reason for trying to rebalance the portfolio mix, borrow at a lower cost and reduce the debt service component. But let me quickly clarify a point. The figure that has been talked about for external borrowing is 5.5 billion. Actually, only 2.5 billion of that will add to debt. That is the only part that is new borrowing there, because we're borrowing to finance the deficit in the 2017 budget. So we didn't create it, it's there. The 3 billion is actually a strategic way to reduce the debt service. So we have about 3.7 trillion naira of Nigerian treasury bills, whose maximum tenor is 1 year. We're saying let's borrow $3 billion to repay some of that. Okay, so it does two things for you. Your debt service drops. There's naira released into the domestic market so that banks can lend. Then our portfolio tenor is longer. So it's actually only 2.5 billion of that is adding to debt stock. The 3 billion is really a rebalancing of your portfolio. Is an exchange, a swap, whichever language is more convenient. That is what we're doing.
Excellent. But you're not free yet, madam. I still have another question, because one thing that is inimitable truth is that Nigeria has huge infrastructure deficits. Everything from roads to power, health, you name it, transportation, everything. Basically, we need money in everything. These critical infrastructure projects need long-term financing. I said to the governor that, when you, to the minister about mineral, everything in infrastructure has to take the long view. So you have to come in with long-term funds. Interestingly enough, the government needs those long-term funds. And you recently, madam, started to actually reissue, if I recall, a 20-year bond as opposed to a 10-year bond. I think the last time we saw a 20-year bond was what, 2009, 2010 maybe? 2010, am I right? Yeah, the question is why, and is there demand?
Okay, thank you. We actually gradually, from our early days, extended the tenor of the domestic debt. So I think in 2008 really was when we issued for the first time, a 20-year bond, and that continued steadily until we had the global financial crisis, which which reduced the demand for, that affected the Nigerian market. So reduced the demand for that tenor. So we stopped temporarily, but have since been issuing the 20-year bond.
So okay, so let me move it. It's a perfect segue to enter stage right, Oscar Onyema. So quite clearly, the brave future is to source external debt and to actually link up with the opportunities and the opportunities outside of Nigeria to a great degree, which means that things like the dual listings that we've discussed today become a lot more important. I want you to place how dual listings and the Nigerian Stock Exchange, the London Stock Exchange, fits in with all this, with what's happening on the federal level and the state level, and also allay some of our fears about dual listings. For example, it sounds expensive. So please, go ahead.
Well, let me say that one thing that patients probably forgot to mention is that we're really looking at how we can do a 30-year bond. So the tenure is extending, and we're trying to position ourselves to finance the infrastructure deficit, and not just your hard infrastructure like roads, but also soft infrastructure like broadband, which we need if we're actually going to get and become real players and move along with the world as we go into the emerging fourth industrial revolution.
So Organ Taxi still has a chance then of raising...
Well, that is a whole different discussion, and that speaks more to equity and making ourselves more accessible for these venture stage type companies. From a dual listing perspective, what it does, we're trying to key into the strategy that the government is implementing. So if debt management office is able to rebalance their debt portfolio and free up capital domestically such that interest rates come down, we see more corporate bond issuances at better prices, more competitive prices. And so we're positioning ourselves to be a real alternative for corporates that are looking to raise debt capital. And with our dual listing partnership with the London Stock Exchange, we give them opportunity not only to access the domestic capital markets, but also in partnership do that internationally. So that is the corporate bond story. The infrastructure bond story is very clear, but we're also looking at interesting products such as REITs. We recently held a REITs conference to really look at the challenges in that space and free up capital to facilitate house ownership for the population, facilitate true mortgage opportunities and other structured products that allow the domestic economy to grow and really block that gap, that infrastructure deficit gap.
Yeah, in the previous presentation, the lady clearly stated that we need to get more domestic investment now into the private sector. So, Oscar, how do we do that? And when from the external, where in the world today is capital for Nigeria?
So typically we look at frontier market funds, global emerging market funds, Africa funds, and we're beginning to actually extend discussions to the public funds, which are very big but tend to be very slow and very deliberate in how they access foreign markets. Domestically, the PFAs, I like the slides that Alice put up. The PFAs have a huge opportunity, especially with the new investment guidelines to increase their allocation to equities, which, as we've seen from around the world and more developed markets, should form the foundation of any retirement portfolio, especially in a country like Nigeria, where the vast majority of the working age people are much younger, so they have longer saving durations. We think that if we're able to access all of those funds across the world, because if you look at market activity today at the Nigerian Stock Exchange, about half of that is foreign and the rest is domestic. Of that half that is foreign, about half is from London, which represents Europe really, as they access our market, and then 20% is from the US, 5% from the Middle East, mostly Dubai, and 2% from Asia, and then the rest from South Africa and Mauritius. So that, just diversifying that stream and really making the case for investing in the country is really what we're pushing.
And going back to dual listings, the regulatory framework in Nigeria is not the same as London. How does a company that wants to dual list traverse that?
Well, we've done a lot of work in that space. On the platform of the partnership, we've gone ahead to synchronize a lot of the back-end activities such that it was possible for Seplat, for example, to not only do a dual listing, but have a truly fungible product. So you could buy in Lagos and sell in London or vice versa. So a lot of that work has been done actually if you're talking about London and Lagos.
Let's stay with regulatory framework, but in this case, let's talk about PPPs. We haven't mentioned public-private partnerships. Always somewhat of a challenge. And I'll go back to the Honourable Minister. There are always challenges to some degree in Nigeria when it's associated to the regulatory framework when it comes to PPP projects. How is the government, the federal government, and in fact, in your ministry, let's talk specifically, if you feel more comfortable talking from the ministry perspective, how are you working with regulators to achieve a successful PPP project, for example?
Well, I'm quite comfortable talking broadly and narrowing down to my ministry. Only yesterday, in the federal cabinet, we approved a road trust fund, which is a hub of PPP in the road infrastructure sector. This is something that has been quite a challenge. We don't have the resources. There are private partners who are willing to come with the resources and then knock that off way of tax rebate, and there's no mechanism in the regulatory authority for that, which is what necessitated the approval of a road trust fund, which happened yesterday. Now private sector players can come, build roads, of course, with the approval of the Federal Ministry of Power Works and Housing and Federal Ministry of Finance, and then get a rebate on their tax for that purpose.
Is this part of what because you announced something called the Roadmap for Growth and Development a while back, is from your ministry?
No, that's my own ministry. I'm talking about PPP in connection with your point that it's been difficult. This just happened yesterday. In my own sector, what we basically try to do is, one, release a lot of the companies that were federal government run, particularly in the Nigerian Mining Corporation portfolio, because frankly things haven't been run well in that regard. There's no beating about the bush on that. And then encouraging these companies to be disposed of by the Bureau of Public Enterprises. And we have had quite a few challenges with some of that. It didn't start with our government. This has begun before we got there. But one of the key things that we've had to deal with are legacy litigations on some of these assets. The most prominent one, of course, is the Ajaokuta steel company
rolling mill
that everybody knows about, and then the aluminium smelter plant in Ikotabasi. And we've just managed to get out of those litigations in order to get them back to a reconcession. So that's something that this government has had to deal with. It's not a problem we started, but government is a continuum. So we're resolving the issues around the litigations and then enlisting those companies back, because government does not want to run those institutions.
And then let me move on to His Excellency, my governor from Edo State. How are you intending to partner with the private sector to leverage these states' competitive advantages we talked about before? I knew you're planning an investment conference. Right. It's called Alagodaro, which is a Benin catchphrase, which means progress or moving forward.
Right.
So,
yeah. Thank you. As you could see from the presentations, clearly for the national or any subnational government to engender growth, you need to bring in private capital and capital from the private sector. And with my background in the private sector, I understand clearly what the private sector investor requires. Firstly, they want to have clarity. They want to see order. They want to see transparency. They want to see the opportunities clearly explained to them. And so what we have done is to align with the federal government economic and growth plan to focus on our competitive advantages, and there are several of them, but here again, prioritizing the ones that are most attractive. And for us, because of our location, logistics, and infrastructure investments to support logistics are key, and we actually started, like was mentioned by the Trade Minister, working with Amaya Capital. We were able to encourage investments into a 450 megawatts thermal power plant, which is due for completion this year and commissioning early next year. We're working with a few other international groups on designing industrial parks, here again using the advantage of enough gas resources in the states to power these plants. Electricity, as you know, is quite scarce in Nigeria, and for states and subnationals who can provide electricity, you'll be able to boost manufacturing, and we are working very closely with a lot of private sector investors in that space. And what's interesting about electricity, with the new evolution we're beginning to see, is distributed power, using alternative power like solar to power production. Like I've said earlier, technology is important, so we're encouraging a lot of startup companies here. They need fiber connections, they need electricity, which we're making available. And lastly, because of our rich cultural heritage, we have a strong bent on promoting tourism and ensuring that we try and get first domestic players, domestic tourists, to begin to boost our tourism assets, creating more tourism assets in our state. Hopefully that will then encourage and attract international investments and international tourists.
We look forward to attending and seeing for ourselves. When are you planning?
It's November 10th to 12th.
Okay, fantastic.
Cool.
Now, I'm only hired for the day, so I can't be fired. So I can ask any question I like, basically. So the question, my selfish question, is kind of, where is the Naira going in 2018? Who's going to be brave enough to answer that question? I was speaking privately, but you never speak privately to a recovering journalist like myself, to someone over there who was saying that they felt that the Naira was going to strengthen, that the fundamentals meant we're going to see a strengthening against the dollar. What's the feeling from my esteemed and learned panel right here? Where is the Naira going?
The CBN governor is here.
Exactly. Direct your question appropriately.
Yes. No. Yes. Yes. Aha. We have the voice of God here. Okay. Please stand up. You liked me when I talked about the ties. You don't like me anymore. I know.
Well, as much as possible, what we try not to do is to, and we've said it, that we're not going to lean on the market, that the market will decide the direction. But because we've seen, we've gotten used to a low price of oil, right? Budget predicated at about $45 per barrel, and we're seeing price of crude at now moving close to 60. We've seen relative stability in production. It's now above 2 million barrels per day. The level of accretion to reserve is improving aggressively. Your prognosis, I don't want to say my prognosis, your prognosis that it will strengthen is very correct. Thank you.
Excellent. You can say no more. With that, I think I heard the final word there. I'd like to thank the CBN Governor, Godwin, the State Governor, Godwin, Honourable Minister Fayemi, Mrs. Patience Oniha, Oscar Onyema. Please stand up and acknowledge the warm applause for that open and frank discussion. Now, without much ado, you have earned coffee and tea for 30 minutes. You definitely can be as caffeinated as you like, and let's get back here in a half an hour or less to continue. Thank you.